Hey guys, how y'all doing? Simon Davis here, Zone Trader. Today I'm going to be talking about range-bound markets. The thing I've seen on how price breaks out of range-bound markets. So I'm going to go into more detail about range-bound markets because price is in a range 80% of the time in the Forex market. So we know the price goes into a range, then out into a trend, then into a range, and out into a trend, and into a range, and out into a trend. And also, I want to talk about turtle soups. So, range-bound markets, how the market breaks out of range-bound markets, and turtle soups. Three things that I want to talk about today. So, gone back as far as I can. So we can quite clearly see that I'm going to draw the range for us. Let's say that's a nice range. So we're in a range here on the hour, and then you separate it into 4. So you've got equilibrium, and I did this in the last video, but obviously I just need to set it up to talk about what I missed in the last video, like an extension of range-bound markets, and how you can tell whether the market's overbought or oversold. Can you guess? Well, it's simple. The market is overbought in this section and oversold in this section. And if you don't believe me, then watch. Okay, look, market. Basically, these 4 lines are very similar to the 70, 50, and 30 on your RSI. See where price peaks down below it, peaks down below it there. Price peaks down below it, peaks down below it there. So this is over a 5-day. So when you set an RSI 5, that's over 5 days. But this is over 1, 2, 3, 4, 5, 6, 7, 8, 9 days, this range. So let's change this to a range 9 and see if it actually looks very similar on range bound. And look at that, it even looks better. So it peaks in there, peaks in a bit there, peaks in a bit there. So we've got a 9-day range. And this is basically, instead of using an RSI, like, you don't need to use an RSI. I'm just showing you like how you can tell whether the market is overbought or oversold in range bound, and that's what the RSI basically indicates. And you don't need it when you put your market into a range like this in 4 sections with the equilibrium in the middle, and then your top 25 and top and bottom 25 lines there, and your top and bottom of your range. So that's range bound markets. Let's just do another one real quick, just to indicate. So on the daily, you do it to the wick. On the hour, do it to the bodies, because there's not much price. So we're in a range here. I'm not going to change all the lines. I'm not going to pull fibs or anything like that. I'm just going to do it by eye. So let's just change this one so it's more. Oh, I'll just change them all just to. Alright, okay, so we've got the range roughly set. So price goes over sold, and there's an order block here, so you draw your order block along. It's not very red. Crimson, right. Your order block along there, and then when price comes back to it, can buy, and out we go. And up we go to equilibrium. So from there to there's 50 pips, and then you can take profit there and let the rest run if you want, and it goes back into kind of order block there and comes back down. In the top of the range, you've got order blocks, and you can also trade turtle soups as well in the top of the range. So this here stops there, stops taking here with this price, so stops there, price comes through it and up. Soon as price goes up out of this line, that's a turtle soup. And same again here, so you've got on a smaller, so you've got stops there, run stops here, and then as soon as price comes through it, you can sell off. So all you do is, you see this is turtle soups now, so the market comes up and there's an order block for it as well in your lower part, in your oversold, and then price rallies up right out of the range and turtle soups here. So price comes up, down, and then once price breaks it, comes back through it, you can then sell off as a turtle soup. And it's a lot easier to see all this, I believe, on the hour. It's very, very clean, and there's no there's not much manipulation. I mean, it might even be better on the 4 hour, but you get more trades on the hour, swing trading like this. Okay, so another thing is, so we've got two ranges there. So there's your range, then you've got a trend, then you've got a range, and then you've got a trend, then you've got a range, then you've got a trend, and then a range and a trend. You know, this is what the market does. Like, obviously it's obvious here, but like 80% guys in a range, if you know how to trade in a range, you've got it down. Let's pull this one up. Okay, so we're in a range here, right? And then you got an order block to buy, and then price comes up to equilibrium on our way, and you got another order block to buy. Price creates a turtle soup here, and then back to equilibrium, order block to buy, and then breaks out. So how do you know when market is going to break out? This is a mitigation block, which I've not spoke about before. All these concepts from ICT, as you know. So that is how you know. So the market goes in to a range, bounces around the range. We know how to trade in a range now from this video and the last video. And then when you see, you could even mark this one off as well. So when you see a big wick, mark it off. So I can mark this off, just to not be biased. And when price goes out of it, look, see, it comes out of and basically runs stops on this. Instead of going back down and turtle souping, it comes back down, touches it, and then rallies away. And that's a mitigation. So this black line here is your mitigation candle for basically they mitigate all their sells, and then the market then rallies off. So I'll show you again. Marketing a range, and when it breaks out of the range, we know that because the market goes up out of the range, I wouldn't trade straight away because it could just be a fake out. Like this is a fake out, it's back into the range. This is a fake out. So you've got to wait for it to come out and back in onto the mitigation pin. So we're in a range here. Let me just draw it like real quick. Like that's a range, that red box. And then we can draw these mitigations just in case they go up, but it comes down. So market comes through the whole box and goes back into it and away, and then you're out of the range. Then we're in a trending market. So it's basically range, a mitigation, trend, range, a mitigation, into range again. So we got range, trend, into range, bound market, into trend, trend, and we got range, and then look, that one there. You can still catch that, which is 160 pips, you know. So it mitigates out with that black line. Let me turn it red next time. So we're in a range. We can draw that there, and then when it comes near it and goes away, it's mitigated out of the range. There's a mitigation out of range as well. Like people say, what's the difference between a breaker and a mitigation block? You use the actual body of the candle for a breaker, and it's got to be a run on stops. And I've spoken about breakers before, so I'm not going to speak about them here. But a mitigation is the wick. So we're in range again, and then look, we can draw this one, we can draw this one, and if price came out and down and up, then yeah, it's broke upwards. But no, price went out, and don't sell it straight away. As soon as it does, when it comes back into it, into an order block as well, then it's properly mitigated and then goes into a trend. In trending markets, you sell order blocks down and buy order blocks up. Okay, so we're in a range, turtle soups away to come out, and then the mitigation is there. And then again, we're in a range again. So don't know if you've seen that range there, that's a range there, isn't it? And then we're in a tight little mini range there. So range, turtle soup, and mitigation. So if you go through this and do this on your own charts, guys, it's like reading music eventually, and it becomes second knowledge. You can see this from a mile away. I'll pull up another pair and do this as well, just to make sure that it's not just working for Great Britain and USD. You know, it works for all pairs. A range, and then we've got no real way of entering really, apart from maybe see that as an order block because it rallies way fast, comes down onto it, back up. But you've got your mitigation, so price is gonna go up from here because it's just broke out of a range and it's gonna continue up unless there is a corresponding order block which is there, so price could bounce off that and come down because that's a strong daily order block. So you always got to look for contradicting elements of the market contradicting signals on the left hand side of the market. Okay guys, so let's go to another pair. Let's go to Aussie USD just for argument's sake. And take off the V lines. Okay, we're back on the hour and take off that as well. Do we have them on there? Yeah, I'll leave them. Yeah, I'll leave them on. Okay, so I can't go. Yeah, I can't go back very far there. Actually, I can't. So I go to Great Britain, AUD, go back well far then, and then let's just take off all these. Okay, so that should do it, and then try and clean it up, because when you save it, unfortunately you bring it, you open it up again, and all the lines that you've drawn come on again. So okay, let's draw it real quick. So we've got range, turtle soup out, so it's the start of coming out of the range, and then you've got your mitigation there, where it doesn't quite get back to it, but still comes down near it, which is a good show for it to rally away into a trend, and then it trends up, and then it turtle soups, and then it trends down, and then it trends down into an order block, and then rallies up. Wow, that's a crazy move. And then it turtle soups and sells down, order block, and then into a range. So it's oversold here. Actually, turtle soups this low and then rallies up. Order block out. And this is a fake out because it actually doesn't, it rallies through it, it doesn't just bounce away, so it's a fake out. So kind of in a range there, and then that is a return to the top, and away it goes. Go back to this one, and there was no higher one. Range again, so we're in a range, told you in a range a lot, and then it sells off. That goes into another range actually. But still, guys, with this in mind, there's your mitigation. And that's actually a breaker thing as well. It's not much pin on there. There's not much wick on there, so it comes down into it for 136 pips sell, so out the range, which is nice. In the range, you trade turtle soups. Range again. So established a new range here. And then you can put that right across. Price comes up, down into it, you wait for it to come back down into it, and then rallies away. And then you buy it off your mitigation block, and it's 130 pips there. Price goes into a range again. Told you guys, 8% of the time it goes into a range. So price is in a range. Turtle soups out of it, and then you know it's definitely out when it comes back and it mitigates down and into a nice trend. And then you got a range again there. Price comes back into it, rallies away. You know, it's the end of the range and into a rally. Range rally, range rally. Okay, guys. So this has been Simon Davis, Zone Trader, talking about overbought and oversold in range-bound conditions, how to trade range-bound conditions, how the market goes from ebb and flow, from range to rally, to range to rally, to range to rally. Markets in consolidation, which is a range 80% of the time. Sorry, range-bound market, when I say range-bound market. In consolidation, 80% of the time. Turtle soups and a mitigation block. So guys, I hope this has helped you in your trading and it's excelled you to new levels. If you want to get in contact with me, I'll leave my Facebook below. Probably going to start doing Instagram soon as well, posting results, and might be making a few posters to help you guys out. When you're on Instagram, you see a trigger which reminds you of a turtle soup, or like a little concept of ITTs I'll make into a poster, or just mindset in general. I do post a lot of mindset on Facebook about trading as well. So anyway guys, I've been Simon Davis, Zone Trader. Thank you very much for listening. See you on the next video, guys.